Bring in Aaron Smith right now. He's managing director of Superfund Financial Singapore and joins us from our newsroom to chart anything you want, actually. Aaron, but let me start with you then and ask you about gold. Can you chart the gold price for us and give us a sense of what the momentum trade is saying right now?
Well, gold is certainly the safe haven of choice right now. Superfund's founder, Christian Baja, continues to hold gold and other precious metals like silver. So we think it's a great opportunity at $900 an ounce. It's actually really cheap. We expect it could easily go above $1,000 an ounce by the end of the year. Certainly, if you look at this chart, you see sort of a resistance level up around north of $960 an ounce. If we can breach that level, that would be very, very bullish. But you can see the price action recently sort of breaking through that moving average level, which is, of course, quite bullish from a technical standpoint. So most investors that have a long-term view could do well to purchase gold at these levels as well as other precious metals. If you look, the retracement in gold is really only in dollar terms because of the strength of the U.S. dollar. But if you look in euro terms or pound sterling, gold is actually already at its all-time highs.
Okay, Aaron, are you as bullish about oil? Because we've seen crude prices pull back quite a bit in the last 6 weeks or so.
Well, at Superfund, we've benefited from uptrends in oil at the early part of the year, but as that has reversed in July and August, we stopped out of those positions. Right now, we think it's safer just to not have a position in oil. Of course, in the long run, we think it's much more likely that oil will go up as compared to, stocks like the Dow Jones. If you go back to the 1970s and think about the oil crisis, the OPEC sort of shocks, that was only in dollar terms. But if you were holding gold, there was actually no shock in the price of oil. So one of the safest things to buy today would be oil. If you look at the long-term chart of oil, there was a huge uptrend, which many trend followers benefited from as the moving averages and the major trend lines started to get breached in July and August. We started to stop out of those positions. Now, if oil starts to trend downwards or continues to trend downwards, from a technical standpoint, we can take short positions as a trend follower. But if oil reverses and continues in an up rally, we can also benefit from that. So one of the safest things you could do today is allocate to a diversified managed future strategy, which can actually make money in two directions rather than just buying commodities long only or stocks long only at this point.
Aaron, if you are a risk-averse investor and you want to get in on the gold play, then how do you do it? Is it through an ETF? Is it through listed gold miners? Or is it through buying the physical bullion? Well, which many people appear to be doing right now.
The best way is with physical gold and physical silver. That's much better than the gold stocks or the ETFs, because you should actually have possession of these metals. But one innovative thing that we've done since 2005 at Superfund was to actually offer a diversified managed future strategy priced in ounces of gold. So gold is the de facto currency of the fund. So this is a way that you can get exposure to gold plus exposure to managed futures in one investment. But certainly in this type of uncertain market environment, we advise to take possession of physical gold, actual ounces and bars of gold and silver.
Okay, Aaron, we'll come back to you in just a moment. Aaron Smith, Managing Director of Superfund Financial Singapore, in our studios here. If you have any... Okay, let's get back right now to Aaron Smith, Managing Director of Superfund Financial Singapore, joining us from our newsroom. Aaron, we want to get you to chart some of the currencies for us right now. Can you look at the Aussie dollar and give us a sense of what that's telling you?
Well, for several years, you saw that the Aussie dollar was strong against the U.S. dollar, but now we're in a clear downtrend. If you look at the 30-day moving average here, this would be your short-term resistance level if there's a rally in the Aussie dollar. So from a technical standpoint, you would want to be short and maybe place a stop order 10–15% above the current levels. At Superfund, we're taking advantage of these downtrends, especially with a short position in the pound sterling. So it's kind of surprising in this environment to see U.S. dollars as strong as they are. If you look in the very, very long-term perspective, the U.S. dollar has lost 80% of its value since it demetallized or depegged to the gold standard in 1971. So it's kind of an interesting environment. The long-term prognosis would be quite bearish for U.S. dollars, but at the moment you could benefit from short positions, especially in pound sterling.
Okay, Aaron, we've got some viewer emails coming in. Let me start with one from Desmond, who's asking you to chart Australia's Woodside Petroleum.
Okay, well, if you look at this particular stock, clearly you can see this sort of trend channel, which is, you know, your resistance level on the top line, your support level on the bottom. You see that Woodside is clearly testing this support level, which is, if it closes below that level, is very, very bearish. You can look at the 50-day moving average as another sort of support level where you would want to stop out or close a short position. So the technical view, at least, you know, from a short-term perspective, would be bearish on this particular stock.
All right, Aaron, thank you so much for joining us today. Aaron Smith, Managing Director of Superfund Financial Singapore, charting your questions and answering them as well.